You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, we've got lots of resource stocks to look at, and resources themselves. Things seem to be helping that sector at the moment.
Yeah,
Let's
that's the main thing.
copper. Let's start with copper.
Copper's not bad. I mean, it had a tumble you can see it had a bad spell, about a third off, wasn't it, from the highs there, and it's bounced quite nicely, and it's quite strongly. We've seen the arrows on the chart suggesting they were oversold. The first one was very good. The second one it faltered, and the last one, well, it was spot on. And those sort of returns, we're getting 30% returns on those sort of things in a very, very short period of time. That's sort of highlighted at the bottom there with the green and the red. The red suggests we're overbought. Green suggests we buy, and those little green patches reinforce where we're going with the green arrows. Above that, we've got the volume. The volume levels have been pretty good. Those lines on the volume chart there suggest we've got extra volume going in. And that can work in good and bad phases. And you can see that sort of the bad phase from last year, when it tumbled from 45 down to about 15, was certainly sort of highlighted at the bottom there with a volume turnaround. And that's quite interesting to note, isn't it, Giles? That's sort of a big volume coming in near the lows.
Absolutely. It tells a lot, doesn't it?
It does tell a lot, yes, that's right. And we've got consolidation on the market now, which suggests it's slightly overbought, with the trend sort of holding. So upward, but expect a bit of profit taking before we consolidate near the 50-day moving average at about the 36 level.
Okay, Bill, thank you very much for that. Now let's look at the next one, which is Hochschild, which you've liked for a while, haven't you?
Well, I buy it on the cheap, Giles, and this is the sort of thing. A lot of people like to buy near the highs, but I haven't found anyone who's made a lot of money buying near the highs, unless we've got an outrageous bull market. And all I can see is people making losses. So the trick here, I think, is to buy quality shares near the dips, and with their peer groups running. And this is what actually happened with Hox. Is Fresnillo came out with some stunning figures, basically based sort of on the low weakening peso and the higher silver price, and where I've highlighted the chart there is the hoop. Is the hoop where we're looking to buy, where we had the two green signals earlier and they failed to offer buying opportunities because there was no follow through, and in that sort of area where the hoop was there is consolidation at the lower end, below the 200-day, and then it sort of flickered up. So catching it just as it burst forward is okay so far. I mean, it's sort of consolidating above its key moving averages. It's not supported much trend yet. It needs a bit more support yet, but it's a speculative reversal, supported with good volume, and we await developments there.
Okay, Bill, thank you very much for that. The next one is Lamprell.
Yeah, this one's ready to go, in my estimation, Giles. This one, I've boxed the area where it looks really rather exciting. We've got, again, consolidation above the key moving averages, low volatility. The short-term moving averages this time are pointing upwards, or short-term trending moving indicators are pointing upwards. There's good relative strength against the market. Volume is very good. Volume trend is very positive. We've had a recent high consolidation. I'm looking for £3 plus on this share, and then I'll probably be trading out. So this one is ready to go, prime ready to go, good order book, and looking for oil prices in its favour, really. If oil prices go up, this will benefit. So this is a good season for oil price rises.
All right, brilliant. Great stuff, Bill. Thank you very much for that. And we're going to have a look at Shanta Gold now.
Yeah, Shanta Gold is, again, a boxy area where I think is interesting again. This one, again, is coupled with several things. We've got high volume. Key to these small shares is high volume coming through, and this is highlighted bottom there. Volume trend is very good. We have a breakout above it, 65% above its 200-day, which is very, very unusual for a lot of those companies. They usually falter at this level, but this one wants to hold and consolidate above that level. And now the shorter-term indicators are suggesting this is going to go higher. In fact, today it's moved up to 20 pence, and there might be further more more movement on the upside. This is really based on behind that we've got high gold prices, low costs coming through, and I think with further gold finds, this one's going to go higher.
So it's the resources all look to be well set, don't they?
Well, they do, and I think they're coming forward. I think they've been neglected. A lot of mining stocks have been overlooked, I think, by investors. I think they were pounded last year because of the high oil prices, and I think they're coming back in now. And with the gold price staying relatively stable, the weakening of local currencies, and the oil prices being weak as well, relatively weak, and I think it works in their favour.
That brings us on to West China Cement.
Yeah, this is fantastic. Now, this is a 30% riser, or 25-30% riser in a week, and this is all come about because of the growth in China. What we have here is a long consolidation. This is one of my favourite chart patterns, is consolidation. If you're actually going to make a reasonable kill on the markets, I think the consolidation is one of the keys here. This is coupled with a new high where the bull came in, and the short-term indicators again suggested that we're going to consolidate. But look at the bottom of the charts. The volume levels are always there. They've never had dwindled, and we've got good, strong volume trend, a volume surge, and the figures were dynamic recently coming through. So the company is propelled itself above the 65% above the 200-day moving average, which is that thin red line, which is just beneath the share price as it stands now, and that will be your stop loss if it goes beneath that. I mean, it could go a lot higher on that sort of growth, on these growth figures, especially if they continue. But this is unusual. It's not unusual for this company. Way back in July last year, it was consolidating at the 150, 160 level, and then burst into 200. And it starts to move above the 65% above the 200-day level, and stays there for some time before it consolidates again. So it's a good chart pattern to look for: consolidation, a break, and then further upside.
Bill Rook from Redmayne Bentley, thank you very much for chatting to us today. We'll chat again next week.
Pleasure.
Bill, that's great stuff.